Let me ask you, do you feel overwhelmed by the constant stress and pressure of trading? You're not alone. Today we'll take a deep dive into the mental health issues faced by traders, and we'll explore the importance of prioritizing mental health in the fast-paced world of trading. So like, subscribe, and stick around for the full video. Mental health issues, including stress, anxiety, and even depression, are very common among traders. The high-pressure nature of trading can take a toll on your mental health, and you may face significant financial and professional risks on a daily basis. This can lead to a range of mental health problems, such as difficulty sleeping, anger, and difficulty concentrating. In severe cases, you may also suffer from burnout, a physical and emotional exhaustion, and a lack of accomplishment. If left unchecked, these mental health issues can seriously impact your ability to trade effectively and may even lead to more serious problems. A cognitive bias is a fancy word. Think of it as a mental shortcut that your brain takes in order to simplify processing information. These biases can lead to irrational decision-making, and they can be problematic in the context of trading, where the ability to make sound decisions is critical. There are many different types of cognitive biases that can affect you. You face them every day. Confirmation bias is one of them. That's the tendency to seek out information that confirms your pre-existing beliefs. You want to short a market, and you look for signs that agree with your existing beliefs, and you ignore information that contradicts it. You see this breakout, and you ignore the other signs indicating that this might not be the best trade. Loss aversion bias is another one. It refers to the tendency to prioritize avoiding losses over maximizing gains. It's when you decide whether to close a buy position you opened. The price has been performing poorly, and you are concerned that you could lose more money if you leave it open. You are also aware that there is a chance that the price could bounce back and that you could close it for a higher price in the future. Because of your loss aversion bias, you may be more likely to close the trade right away in order to avoid the possibility of further losses, even if this means giving up the chance to potentially make more money in the future. I still suffer from this. It's one of my biggest struggles in trading. To avoid loss aversion bias, take a long-term perspective. Rather than focusing on potential short-term losses, try to consider the potential rewards over the long term. Also, use risk management strategies. Implementing different strategies with different stop-loss orders can help to mitigate the potential for losses and can make it easier to manage risk. As a trader, it's important for you to set boundaries and take breaks from trading in order to maintain your mental health. Trading is a demanding and stressful activity, and it's easy to get caught up in the grind without taking breaks. However, this can lead to burnout and will negatively impact your performance. When I first started, I was trading for 10-12 hours per day. Even when I was watching a movie, I'd still think about it. Setting boundaries in trading is very important. This involves setting limits on the amount of time you spend trading and analyzing a chart, as well as establishing clear lines between this and your personal life. This involves setting specific times for trading and mandatory staying aside certain hours or days that are designated as off-limits for trading. Taking breaks is also essential for maintaining a healthy work-life balance. By making time for yourself and your personal life, you'll be able to maintain a fresh perspective to your trading and stay focused and motivated. As a trader, it's important to build resilience and develop strategies for coping with setbacks and losses. Here are a few things that I do to stay resilient and bounce back from losses. First is to maintain perspective. So you lost a trade on euro yen. It can be very easy to get caught up in the moment and lose sight of the bigger picture when you lose a trade. I try to remind myself that losses are a natural part of the trading process, and that every trade is just one small piece of the puzzle. It's important to remember that trading is just one part of your life, and you shouldn't let it consume you. It's imperative to make time for other interests and activities outside of the screen. I also try to stay positive. It's easy to get down on yourself after you made a mistake and took a bad trade, but I try to stay positive and focus on the things that I did well in the process. Seeking support is another step. If you are struggling to cope with a setback in trading, maybe try to reach out to friends, family, or other traders for support. It can be helpful to talk with someone who can offer a fresh perspective. And of course, learning from your mistakes is another step. I've talked about it many times. After a setback, try to take a step back and analyze what went wrong. From my trading journey, I've learned that there is a strong link between my mental health and my risk-taking behavior. When I'm feeling anxious or stressed, I tend to be more risk-averse and take on too much risk. I might use bigger stop losses. I might double my exposure, trying to recover my losses. On the other hand, when I'm feeling confident and in control, I know how to manage my risk. I have also learned that my mental state can affect my ability to make good decisions. When I'm feeling overwhelmed or emotional, it's harder for me to think clearly and analyze data objectively. This can lead to poor decisions that will expose you to unnecessary risk. Revenge trading is the immediate result when you try to get back at a market and try to recover a trade that didn't go your way. So, to manage the link between mental health and risk-taking in your trading, try to pay attention to your emotional state. This might involve setting time to relax and de-stress, or avoid making important decisions when you're feeling emotional. As a trader, you spend a lot of time in front of the screens, whether you're analyzing data, executing trades, or tracking the markets. This can and will have a negative impact on your mental health. As I said before, prolonged screen time was my number one problem. I used to stay in front of the screen for hours. The constant flow of information and the pressure to make quick decisions was overwhelming, and it was hard to disconnect from trading when I was always connected. To mitigate the negative effects of the screen time on your mental health, again, take breaks from trading whenever possible, making a conscious effort to look away from the screen and focus on something else you enjoy. Try to make time for activities that don't involve screens. My solution was to move to swing trading and spend less time day trading. Nowadays, I spend 2, maximum 3 hours per day to trade, sometimes even less. Impulsive or reckless behavior in trading is another cause which will affect your mental health. This refers to making trades without a careful consideration of the potential risks and rewards, or disregarding risk management strategies. This type of behavior will lead to significant losses and is mainly caused by your desire for quick profits or a lack of understanding of the markets. One way to avoid impulsive or reckless behavior in trading is to develop a trading plan and stick to it. This plan should include a clear set of rules for entering and exiting trades, as well as risk management strategies, such as always using stop-loss orders. It's also important to maintain a long-term perspective and to resist the temptation to chase after quick profits. So what you lost to trades today? Markets will open tomorrow and the next day, and there are plenty of other opportunities. Be aware of your own emotional state and recognize when it might be affecting your decision-making. And it's also important to continuously educate yourself about the markets and to stay up to date on the latest events that can impact the markets. This will help you to ensure that your trading decisions are based on a solid understanding of the markets, rather than on impulsive or reckless behavior. It's natural to feel upset or discouraged after a trading loss, and it's challenging to maintain a positive attitude in the face of such setbacks. I know it's hard to be happy when you just lost $1,000 on a single trade, but if you want to remain in the game for the long term, it's important to try to maintain a positive attitude and to keep things in perspective. Reflect on each losing trade, and rather than dwelling on the negative, try to objectively evaluate what happened and what could have been done differently. Also, set small, achievable goals. Rather than trying to double your account in 1 month, try setting small, achievable goals for yourself. Go for a 5 or 10% increase. This can help to give you a sense of control and can increase confidence in your trading abilities. Trading can be a solitary task, and this can lead to social isolation and the lack of social support, which can have negative consequences for your mental health. I'm an introvert, and I don't mind this time alone with myself, but prolonged trading hours can lead to feelings of loneliness and isolation, which can lead to other dangerous mental health problems, such as anxiety and even depression. To mitigate the negative impact of social isolation on mental health when trading, it's important to make an effort to stay connected with other traders and seek out social support. This might involve joining a trading community or a networking group, spending time with friends and family, and participating in activities outside of trading. There's a fine line between trading and gambling. Both involve taking a financial risk in the hopes of achieving a profit, but there are some key differences between the two. When you trade, you're making informed decisions based on market analysis, risk management, and a clear strategy. It's a form of investment that requires discipline, skill, and knowledge. Gambling, on the other hand, is mostly based on chance and is not backed by any form of analysis or strategy, and it can be highly addictive. When these two concepts are not clear, your mental health will suffer. You must know the difference between trading and gambling, and it's important to be aware of your own motivations and goals. If you're making informed and rational decisions based on a clear strategy, then you are engaging in trading. However, if you're trading based on emotions or a desire for quick profits without a clear plan, then you cross the line into gambling. Trading addiction refers to a compulsive need to trade, even when it's not in your best interest. This can be fueled by a variety of factors, including the belief that you can get rich quickly through trading, the thrill of the markets, or maybe a desire to escape from other problems. If you're feeling an urge to trade constantly, if you're neglecting other responsibilities in order to trade, if you're continuing to trade even when it's causing you financial or personal problems, if you're feeling anxious or stressed when unable to trade, then you may have problems with trading addiction. These are the most dangerous problems you could face when trading, and it's important to seek professional help. I had a friend that lost his house because of this. It's so easy to be caught up in this spiral, and at the same time, it's hard to get out if things go out of control. Trading is demanding, and it's very important to be aware and recognize the warning signs. These signs may include changes in mood, difficulty sleeping, anxiety, and difficulty concentrating. If you are experiencing any of these symptoms, there's no shame in seeking some professional help. Trading should not take control over your life or your mind. This was a very important video, and if you enjoyed learning about the role of psychology in trading, Be sure to check out our next video on improving your trading psychology, and check out our Academy program if you want to further level up your trading. Until next time.